Hello everyone, it's Thumper from Financial Options, and today this video is about our weekly review where I go over some of the trades I did and what I'm looking to do going forward. So this week was really good. We made back a lot of paper losses, and I happened to have some daily snapshots of each day, so I decided to put those in this time. You can kind of see like it came back pretty quick. Uh, One of my mentors who taught me a lot about options, one of his favorite sayings was, "It all comes back." And the other thing he liked to say was, the market is just a vehicle to transfer wealth from the impatient to the patient. So you'll see some paper losses, and if your trades were on good founded ideas and you have confidence to hold those, and you have the confidence to like run through that entire trade, it has a chance to come back. And that's basically what my portfolio was doing this week, is bouncing back from last week's losses. We'll jump right into it. The progress report at close on Friday, my account was up to 166. Brings us back to like the beginning of April, mid-April kind of spot. Made back a lot of losses from the first week of May, but we still got a ways to go to be profitable. Realized premium for May dropped about 2,000 because I did end up taking a loss on a roll position. So here are this week's trades. So this week I was really just sitting on the sidelines, just letting my portfolio do its thing. My margin was sitting around 45% for a majority of it, and I'm not going to be putting on new trades during that time. So that's why Monday through Thursday I only had 4 trades. Monday I took off a Planatir play I had on. I wanted to free up a little bit of extra margin. We just came off those 2 weeks with a slight pullback that really affected my portfolio. So I was just taking off a little bit more risk to leave some room to breathe. I ended up deciding to roll this wish position. I'm fine with taking an assignment at 15, but it turns out I could get paid $50 to just wait another month to make a decision, and it takes up less margin just rolling it out. So that's why I just chose to roll that out for a month. If I was assigned on these wish puts, my cost basis would be, I think, like 1230 or something like that. To get that, you would take 15, multiply by 100, because it's an option. One contract is 100 shares. Multiply that by 10 because we have 10 contracts going, and then add in the realized loss. Take that number, subtract 630, multiply by 100 times 10 for the contracts. So if next month I get assigned on this, my cost basis would be in the $12 range, which I'm fine with Wish. I think it'll go up eventually. So that's what that one is. Thursday, snow came up. As you might know, I have a couple of leaves on snow. They were sitting real red the last couple of weeks. Thursday, they came up to like almost neutral. I was debating about closing some, but ultimately decided I'd rather just sell some calls against it. So if it does dip, at least I lowered my cost basis by over 10% on these snow calls. And if it does go up above 250, I'll be able to close out the whole snow position for a pretty good net profit. Friday came around. I actually stayed home Friday. Had a reaction to the COVID vaccine and got the first dose, and didn't feel safe to drive to work, so I was off. But that also meant I could day trade, so I had a lot more trades in this week because of that. Had an off day. Yeah, so I'll just run through them here. Zoom. This was part of a roll position. I decided to take that off. Overall, I think between the two positions is like a $200 gain. I lost about 1,200 off the original position. This was a ratio row down or a double down row that I did. Decided to take that off because there's a lot of contracts put in one position here. And after I did that, I had some more freedom to put on other plays, and so I went on a shopping spree. This next flicks is just to turn a put I have on into a strangle. The VIX put, this was a play that I thought I could make a quick buck on. VIX didn't really move the way I thought it would, like this contract. So I decided just to get out of it. Got a small gain, but it's more so just I was fine with like break even, just get out of it. it didn't act the way I thought, so it's kind of like a wasted trade. It felt like, but I mean, whatever. We got some lunch money out of it. Facebook threw in a put, pretty self-explanatory. Microsoft and Spotify. These contracts were expiring today, but I chose to close them out. So Microsoft, it cost $3 to close out. Let's do that. Why wait for some random news to happen? Spotify, in hindsight, I could have just waited till the afternoon to close this out. But in the morning, Spotify was moving down. Market I wasn't sure which way the market was going to move, so I gave back a third of the contract just to be done with it and not worry about it going against me. I then opened up a Microsoft Strangle, AMD put, and Apple put. Not too excited about any of these plays. Trying to open up more calls against my portfolio because like the last 2 weeks proved that I was way too bullish in my portfolio. If the market goes against me, my portfolio will swing pretty hard down. So putting some more calls can help stabilize that and make those swings less drastic. So I'm trying to put on more calls against my portfolio. All right, well, going forward, I want to get my portfolio to be more delta neutral. I've been very long the market, and I didn't realize how long I was until like these last 2 weeks, or a small pullback. It wasn't even that big of a pullback. My portfolio really dropped quickly, and those swings were a little bit too wild even for me. So I want to start selling some calls going forward, bring that delta more neutral. What's interesting is on Sunday, Hidden Freedom Investing and GW brought on James, and he's been trading in the market since 2004, and he really talked about his strategies, about his strangles that he uses, and it makes me want to like revisit selling calls against my positions. Something he talked about a lot was your portfolio delta, and that's something I never really paid attention to before. But in short, the higher this number is, the more long you are in the market. So if the market goes up, you make money. If it goes down, you'd be hurting. And I just put that onto my profile page, and I'm going to start tracking that. Wish I had this data going back so I could see how well I perform based on these numbers. But for now, I'm just going to be tracking these things. Another thing I like that I did is I got my Vega down a lot. And that's because I'm selling some calls and got out of some wacky positions. So next I'm going to talk about my Planatir position. Some people ask me why do I continue to play on Planatir, and well, quite frankly, it's because I made a lot of money off of them. So one of the good things about tracking all your trades is you can go back in time and see what you've done. And you can see I've been playing Planatir for quite some time. I'm not going to go over all these trades, but I do want to point out a couple here. So here you can see I lost 1,900, but this is part of a poor man's covered call, so these two trades were linked together, and I ended up actually making 2,700 off the leap. This just goes to show you how powerful like a poor man's covered call is. If you don't know anything about that strategy, I'm going to have a video come out on that, I think next week, Sunday, is what I'm aiming for. And basically, this was a trade I put on 11/23, took off 2 days later, and got like a 12% return on the cash it took to get it, because it only took 5,500 or so to secure this position. I made like $700 off that, so that was pretty nice. Later on, I ran the Caterpillar on Planatir for a while, and that's just when you sell a contract like every week and let it expire. Like you sell it like 30 days out and just kind of let it expire. If you get a big pop, then close it early and take that profit, which ended up happening. So I ended up gutting my Caterpillar here, but I ran the Caterpillar for a while on it. Currently, I do have 1,000 shares. I sold an aggressive put because I was okay with picking up 1,000 shares at 23.50. Collected 51 cents. So actually, the cost basis is 23 off this position. And since then, I've been selling covered calls against it, slowly lowering the cost basis of that. And my latest one I have on it, I have the 24 strike, which is even above the strike price I was assigned at. So that's pretty nice. Through all of these plays I've done on Planatir, like I've made $12,593. If you want to take all the premium you made from trade on one ticker and apply it to your current position, my 1,000 shares doing that, my cost basis would be 1091. Like, that's insane. I personally don't like to look at it that way. For me, I only look at the last premium received compared to like the strike price. So 23.50, and I received 44 of my last one. So if I'm selling covered calls against it, I want to stay above 23 if possible. But it's kind of neat to look at it this way, going back, like, how good have I been on this underlying? Like, do I really am I successful on this ticker? If not, maybe I stop playing on this one. But so far, the numbers say I should keep playing on it. If I didn't already have shares on it, and you wanted to like add up the premium and divide it by the price, like the current price, I would essentially get 600 shares free from just playing options on Planatir. It's just kind of something neat to look at, depending on how far back you want to link trades together. And if you haven't yet, make sure you join Randy's Discord server. A lot of knowledgeable people in there that are sharing their experience, and it'll save you from learning some of these lessons by paying with your own money. Like, it's a free Discord. And if you like that spreadsheet you saw, I did release a video. I'm gonna try to link it right here. I've never actually tried doing that on YouTube yet. We'll see how that turns out. If you click on that, you should go to a video that has the spreadsheet so you can make your own copy and use it. And if you liked this video and you want to see more of this, like, hit that subscribe button below and you get notified when I release new videos. Tomorrow, I want to release a covered call video and why like a dividend investor should probably take advantage of it. And then Wednesday, I might not put out a video because the following Sunday, I want to put out a video about poor man covered calls and all the stuff I want to cover in that. I think this video could take quite a bit of time to put together, and it might end up being like a 40-minute to an hour video. So Wednesday, there probably won't be a video for me, but the following Sunday will be an extra long one that you can consume. And with that said, guys, have a good weekend. I am not a financial advisor. Any information included in this video is for informational and entertainment purposes only. It is not intended to be investment advice. Please seek a licensed professional for investment, tax, or legal advice.